Some of the wealthiest investors in America are quietly making the same move right now, and most people have no idea it's happening. While the average person is distracted by headlines, social media, and short-term market noise, smart money is shifting into one asset that has protected wealth for thousands of years: gold. And if history repeats itself the way many experts believe it might, this move could become one of the most important financial signals of the year. Back in 2008, before the financial crisis exploded across global markets, institutional investors began repositioning their portfolios months before the average investor understood what was coming. While television analysts were still telling people everything was fine, those investors were quietly moving into defensive assets. Then the market crashed. Retirement accounts were devastated. Panic spread across Wall Street, and gold surged as fear consumed the financial system. The same pattern may be forming again right now, and the warning signs are becoming harder to ignore. Now listen to my voice very carefully, because what I'm about to tell you is something most people have never heard explained this way before. I'm about to reveal hidden information about gold that could completely change how you look at the financial system. So ignore whatever is happening on the screen and focus only on what I'm saying. Smart investors do not buy gold because they think it will make them rich overnight. They buy gold because they understand what happens when confidence in the financial system begins to crack. Gold is not a growth asset. It is a protection asset. It is what sophisticated investors buy when they believe serious economic instability may be ahead. And right now, instability is everywhere. Inflation may have cooled from its peak, but prices remain elevated across nearly every major category in the American economy. Housing is expensive, food costs remain high, insurance premiums are rising, and consumer debt is at record levels. Americans are paying more for essentials, while their savings continue to shrink, and that creates pressure. Pressure eventually breaks weak systems. At the same time, the United States national debt has climbed to historic levels. Every year, more government revenue goes toward paying interest on debt instead of funding productive growth. When debt grows too large, governments usually face painful choices: cut spending, raise taxes, or print more money. And when money printing increases, purchasing power declines. Gold investors understand that cycle better than most, but inflation and debt are only part of the story. Another reason wealthy investors are buying gold is because many believe financial markets may be dangerously overvalued. Stocks remain expensive by historical standards, and much of the market's optimism is based on expectations that everything will go perfectly. But when markets price imperfection, even small disappointments can trigger large corrections. That is why fear matters. When fear enters the market, investors stop chasing growth and start protecting capital. Historically, gold has benefited during those moments because it is viewed as a store of value when confidence in paper assets begins to weaken. One of the biggest hidden signals most retail investors ignore is central bank buying. Around the world, central banks have been accumulating large amounts of gold reserves. Think about that carefully. The very institutions with access to elite economists, intelligence analysts, and deep macroeconomic data are increasing exposure to gold. They are not doing that for fun. They are doing it because they see long-term risks. Geopolitical tensions are adding even more fuel to the fire. Wars, trade disputes, sanctions, supply chain disruptions, and political instability all increase uncertainty in global markets, and uncertainty drives demand for safe haven assets. Gold has historically performed well during periods when the world becomes less predictable. There is also growing concern about the long-term purchasing power of the US dollar. Throughout history, reserve currencies have changed as debt burdens rise and confidence shifts. Many investors see gold as a hedge against that possibility because, unlike fiat currency, gold cannot be printed by governments or central banks. This is why experienced investors often treat gold as insurance rather than speculation. They do not buy it because they expect disaster tomorrow. They buy it because if disaster ever arrives, they want to be prepared before everyone else panics. That is the difference between average investors and sophisticated investors. Average investors react after the headlines. Smart investors prepare before the headlines. And if you study financial history carefully, you'll notice that gold often starts moving before the broader public understands why. Another major reason investors are buying gold is diversification. Many portfolios today are heavily concentrated in stocks, tech, retirement funds, and paper assets. If markets experience a major correction, portfolios without diversification can suffer severe damage. Gold offers a way to hold an asset that often behaves differently from equities. During times of market stress, legendary investors understand a simple principle. You do not wait for the storm to buy insurance. You buy insurance while the sky still looks clear. That is exactly what many smart investors appear to be doing right now. Economic growth is slowing in several sectors. Corporate layoffs continue across industries. Commercial real estate remains under pressure. Banks are tightening lending standards. Consumers are relying more heavily on debt. Small businesses are struggling with higher costs. None of these signs guarantee a crash, but together they suggest rising fragility beneath the surface of the economy. Could the economy avoid a severe downturn? Absolutely. But smart investors are not betting everything on optimism. They are hedging. They are preparing. They are positioning defensively, while others remain complacent. That is why gold demand is rising. Not because gold is magical, not because it always goes up, but because when uncertainty increases, gold remains one of the most trusted stores of value in financial history. So the real question is not simply whether gold will rise. The deeper question is why so many experienced investors are preparing right now. Because preparation itself sends a message. It suggests caution. It suggests concern. It suggests that beneath the surface of bullish headlines, many investors with serious money may be seeing risks the average person is ignoring. Whether they are right or wrong remains to be seen. But history has shown that ignoring what smart money is doing can be an expensive mistake. So if you are wondering why smart investors are buying gold right now, the answer is simple. They see inflation risk. They see debt risk. They see market valuation risk. They see currency debasement risk. They see geopolitical instability. They see fragility in the financial system. And they are acting before fear becomes obvious. Because by the time the average investor realizes what is happening, the opportunity to prepare may already be gone. The people who protect wealth are rarely the loudest in the room. They move early. They act before consensus. They prepare while others debate. And right now, many of them are buying gold. So the next time someone asks why gold is rising, understand that the answer may have less to do with gold itself and more to do with what smart money believes could be coming next. Because in finance, the most important signals are often the moves happening quietly in the background before the rest of the world catches on.